Hey everybody, Jack Lucky Mortgage Advisor here, and welcome to episode 2 of Mortgage Myths. In this series, I'm going over things that I've heard said in the mortgage industry over the past few years by other lenders, by realtors, even borrowers who have said things that just aren't completely true. So let's get started. Mortgage myth number 2, unlike rent, your mortgage payment will never go up. This is a very popular thing I heard said all the time by realtors and loan officers. And they convince you to buy a house versus renting because your mortgage payment will never go up, unlike rent that goes up every year. Now, I'm here to tell you that this technically is not true. Now, hold up, wait a minute. I know what you're going to say. I have a fixed rate mortgage. That's what that means. Fixed rate means my mortgage payment is fixed for 30 years, right? Well, technically that's true, but in order to explain to you what I'm talking about, we're going to need to go over what all goes into a mortgage payment. So here we go. The first part of your mortgage payment is the principal and interest. The principal is the portion of your payment that pays down the balance of the loan, right? And the interest is interest. It's the cost of borrowing money, right? I mean, this is the same on any other loan you have. There's always the principal and interest portion. And if you have a fixed rate mortgage, that is fixed. The next part of your payment is taxes and insurance, commonly known as escrow. Now, an escrow is a forced savings account where the mortgage company takes a portion of your mortgage payment each month, puts it into this savings account in order to pay your property taxes and insurance when those bills come due, which is a great benefit for you because these bills are typically thousands of dollars at a time, and you don't want to get a $2,000 bill in the mail, right? So they do this escrow to pay your property taxes when they come due and pay your mortgage, or not your mortgage insurance, pay your homeowner's insurance when it comes due. And then the last part of your payment is the mortgage insurance, PMI, which this one varies. Some loans don't even have this. If you're able to put 20% down on your mortgage, you won't even have PMI, but that's the last part of your mortgage payment. So this is the full breakdown of your mortgage payment. You have the principal, interest, taxes and insurance, and the PMI. Now, if you are in a fixed rate mortgage, the principal and interest payment will never change. If you have a 30-year fixed, it's fixed for 30 years. If you have a 15-year fixed, it's fixed for 15 years. If you have an adjustable rate mortgage, all bets are off and your payment can change. So I'm only talking about fixed rate mortgages for the purpose of this video. Also, it's worth noting that thanks to a thing called amortization, the amount that is principal and the amount that is interest will actually change every single payment. Your principal amount will get bigger as time goes on, and the interest portion will get smaller over time. That's called amortization. But the total of those two combined will stay the same for the entire portion of your fixed rate mortgage, for the entire term of your fixed rate mortgage. Now, the taxes and insurance escrow will absolutely change. It will change every year. Your homeowner's insurance will change every year as new premiums come out. You make a change on your insurance, you change your deductible, you switch insurance companies, or their just rates go up. Things happen. So that part of it is going to change. Your property taxes, everyone who lives in St. Charles County is painfully aware that your property taxes definitely go up. They sometimes go up a lot. So that portion of your payment is absolutely going to change. Sometimes down if you get cheaper insurance or something like that, usually up as insurance costs go up and property taxes go up, right? And then the last one, PMI. So this one kind of depends on what type of loan you have, what type of PMI, or if you have PMI at all. A lot of mortgage PMI will actually go down over time, and that's because it's based on the existing loan amount. So you may, depending on what type of loan you have, you may see that PMI payment slightly go down each year. They typically don't go up, they just go down over time. So there you have it. There is the mortgage payment breakdown, and I'm calling this myth debunked. It is false. Your mortgage payment will definitely change. The fixed principal and interest portion won't, but those escrows will change every year. I hope this video has been helpful for you guys. Thanks for watching. We'll see you next time.